Berkshire Hathaway shares pulling back after hitting a record high early in the session. The company reporting a big profit gain in the fourth quarter. The highs of the day, that company was closing in on a $1 trillion market cap. And joining us now is CFRA Vice President of Equity Research, Cathy Seifert. Cathy, it is good to see you. Just looking at these results, so Berkshire's reporting posts a record, Cathy, $37.4 billion in operating profit. Interested to get your take, Cathy, on the report. What'd you make of it?
I thought the numbers were decent. I mean, this is a large company, and for all of 2023, they posted almost a 20% operating revenue growth. Berkshire has a really good insurance franchise in Geico and a reinsurance franchise, and as well as a commercial lines franchise. And that really drove results. That plus higher investment income. I mean, there are some drags on results, and I think one of the reasons why the stock may be a little weak today is some concerns over Berkshire's utilities exposure and some of the wildfire liability that their utilities subsidiaries have. But all in all, I thought it was a really good quarter and a year.
Cathy, it's Julie here. What do you make of Warren Buffett's sort of tempering expectations, which I guess is not that unusual for him to do, right? But, to say that for a firm of their size to continue to grow at this rate and also to continue to find opportunities is just going to be difficult. Is that something that you think should dissuade investors?
No, I mean, I think the letter addressed a number of things that had been speculated, whether or not Berkshire was going to buy Occidental Petroleum. He addressed that and said definitively they were not. The Japanese trading companies that they took an equity stake in, there was a question about whether or not they were going to acquire those. And I also think that Berkshire is trying to tamp down expectations because they are so large. It's really difficult to move the needle when you're this big, which isn't to say that they're not going to deploy some of their $160+ billion in cash into acquisitions. I just think he's trying to tamp down expectations that he's going to make some blockbuster deal.
Are you surprised, though, Cathy, that he is sitting on that kind of mountain of cash at this point? I mean, $167 billion. Do you think it's the right move? They haven't done a big deal, Cathy, correct me if I'm wrong, in some time. I'm wondering if you're surprised they haven't put that to work.
Well, as an insurance company, they do have to keep, a fair amount of powder dry to pay claims. So it's not as though that entire cash trove is available for him to deploy into acquisitions. I actually think the deal that they made a couple years ago to buy Allegheny strategically was a great move. It increased their presence in one of the few businesses where there's pricing power and there's secular growth, and that's the commercial insurance space. It also got them Joe Brandon back into the fold, which is an important consideration because I do think succession is going to be an issue. But back to your question about cash, I think that they will gradually, make some deals. Again, market valuations are not that attractive, which, to my mind, makes me think they may look at private companies, but they also have a lot of competition from private equity, venture capital. So I do think that there is a level of frustration at Berkshire, about deploying that capital. There's also the option to buy back shares. The shares have been on a tear this year so that, even their own shares may not be as attractive to them on a buyback perspective.
Do you think that frustration is shared by shareholders as well? Or do you think that most of the folks who hold Berkshire are sort of content to just ride it out and be patient?
I think Berkshire has a fairly satisfied investor base. I do sort of wonder in a post-Buffett environment if there is a push to initiate a dividend. They're one of the few sort of non-tech, they're not a rapidly growing firm. They're a value stock, yet they don't pay a dividend. I could see a situation where, sometime in the future, perhaps their investor base pushes them to initiate a dividend. But my sense is that the majority of Berkshire Hathaway's shareholder base is a pretty satisfied bunch.
And Cathy, I'll get you out of here on this. Kind of looking ahead, it was interesting. Buffett said, listen, he thinks his successor is ready to take the baton. Said Greg Abel, ready to be CEO tomorrow, I think is how Buffett put it. Is that how you see it, Cathy?
Yeah, I mean, I think as we head into the annual meeting, I think front and center in investors' minds is the succession issue. I mean, Buffett is 93. I do think that they could do a better job of highlighting the strength of the management bench a couple of levels below the C-suite, because there is a pretty strong team there guiding a number of the different operating subsidiaries. Yet shareholders rarely get the opportunity to really hear from these people. I think in the letter, he made a very interesting point when he said, join us in Omaha, and Ajit and Greg and I will be on the dais answering your questions. So I do think there's a concerted effort, as well there should be, to sort of, calm investor concerns about the succession issue at the company.
Cathy, thank you so much. Really appreciate it.
My pleasure.